The latest numbers out of the Toronto Regional Real Estate Board shows us that the recent run of rate hikes has made its intended impact on the cooling down the once hot red housing market.
But many are, quote, short-term shock. So let's talk about that short-term shock right now with Jason Mercer, the Chief Market Analyst for TREB, for a look at what's taking shape. And Jason, great to see you in person again. It's been a couple of years, so thanks for coming back here. Let's talk about this short-term shock and what that really is doing to the market, because the numbers you're releasing today show some really significant shifts in the buying and selling patterns.
Yeah, absolutely. I mean, anytime you see a shock to the market, like a rate increase, or if you're thinking back to the OSFI stress test when that came online in 2019, you do see an initial pullback, and certainly we've seen that since February or March. You know, both sales and the average selling price have been trending downwards, and you know, on the pricing front, it's been trending downwards in order to mitigate the impact of higher borrowing costs. As a great majority of home buyers purchase a home using a mortgage, they're not paying cash, and so really what they're doing is you're seeing price adjust in order to keep that monthly mortgage payment in an affordable range. And what we've seen over the last few months is that's sort of flatlined a little bit, and so as a result, we've also found some support for price as well since, say, August, September.
Are people holding off selling their homes?
I think definitely if you look at what we've seen in the GTA over the past number of months, we're seeing new listings down in comparison to last year, and last year we were already seeing listings in short supply, and so that's also helped provide some support for pricing, that the markets remain tight enough to see prices in that sort of 1.08 to 1.09 level over the last few months.
Jason, you look at the market numbers and you've been looking at them for years. Can sellers or even buyers, in fact, really time the market to try to find either the bottom or the top, depending on which side of the equation you're on?
Yeah, I mean, you're always going to see short-term fluctuations depending on where you are in the cycle, and obviously right now interest rates are having that type of impact. But looking long-term at the GTA housing market, I mean, we're expecting to see record levels of immigration coming into Canada, and the GTA and broader Greater Golden Horseshoe will be the single greatest beneficiary of that. And so all of these new households are going to require a place to live, whether they're looking to own or rent. And so long term, we're expecting the demand for housing to remain strong. The real problem is going to be, are we going to be able to keep up? Are we going to be able to see enough housing come online? And not just in the aggregate, but the types of housing that are going to meet people's needs as they move through that continuum over time.
We knew that rising interest rates was going to have a significant effect. Did you think that it was going to be like this, or worse, or better?
I think certainly if you look back to this time last year when we were starting to forecast 2022, we were certainly counting on interest rate increases. We weren't seeing quite the inflation pressure that came to be, and so I would say that everyone was a little bit surprised by the magnitude of the rate increases and speed that they're rolled on by the Bank of Canada.
And Jason, we know the Bank of Canada is getting together again in Ottawa tomorrow. It's likely we're going to see another rate hike. Is your expectation that this may well be the last one, considering what your numbers are showing, reflecting what's happening in the market and what it's doing to it? Yeah,
I think that's certainly the consensus view. And if you look at sort of longer term bond yields and sort of see where those are heading, I think that the market has that expectation as well. And so while on the short term borrowing side, an increase from the Bank of Canada will impact borrowing costs there, you're already seeing that to a certain degree baked in sort of medium term mortgage products like the popular 5-year mortgage rate.
Right, exactly. Okay, Jason, really appreciate you coming in and helping us break down the numbers this morning. Thanks for joining us.
Thanks
Good to see you in person.
Yeah.
Okay.